Welcome back. You're tuned into Bazaar Morning Call, and we've got a market to contend with, barring the negative sentiment that we've seen yesterday. Dharmesh Kant joins us on the show. Hi, Dharmesh. Good morning. Good to see you win. Well, it seems yesterday there was a bit of an overreaction on the downside, at least because of the sentiment hit that we got. What's your view? And did you spot anything that was positive and that entail would, force you to go ahead and buy a couple of stocks? If you could name 2-3 beneficiaries of Budget 2026.
Yeah, good morning, Nigel. Thanks for having me for the show. So if you recall yesterday's conversations around the same time, I have pointed out that spending is what is more critical in the budget. Of course, allocation does matter, but it's more to do with spending. And spending was good this time around. Even the capex for the government has done 10,95,000 odd crores. It was only down by 2%. Usual rate of, downfalls has been 8 to 9% going by last 2 years number. Defense particularly came out very well. Even they exceeded the allocation. About 14% more spending was done in the defense for likely to do for revised estimates for this time around. Same is the case with railways. The spending was pretty well, and the power sector. So I think the critical areas where the spending should be done, government has exceeded what they have allocated for last year budget, estimates. And this year again, there has been an incremental increase. Defense, yesterday there was sharp reaction on most of the stocks. They came down sharply. But I think this is a good time and opportunity to buy them, because if you look at the entire defense space, they are sitting on 4.5 times book-to-bill ratio. So very healthy order book in excess of 3 lakh odd crores for 8 to 9 defense companies put together. And their HAL, BDL is standing at a book-to-bill ratio more than 6x. BEL itself is standing at a book-to-bill ratio of 3x. So strong order book visibility, all strong execution visibility over the next 2 to 3 years time frame. And this is, just allocating more, but execution will take its own sweet time. So our sense is 18 to 20% kind of a profitability compounding is likely out there. And there still the top pick remains Hindustan Aeronautics because of the valuation comfort it enjoys as compared to BEL, and the structural problems of jet engines not getting, aircraft engines not being supplied by GE is now being resolved. So but that supply will enhance. Railway, I think, is one sector which has been languishing for last 2 years, and now it's the time to look at it again. After 3 years of budgetary allocation, this time around there has been a growth in the railway spending around 11%. Execution has also started picking up, and there, to my mind, Ircon International, because of valuation comfort, stands a good chance. Is standing over 24,000 odd crores of order book and doubling of railway lines and more gauges to be put in place. All this will, put in line, will go smoothly with Ircon International. Valuation-wise, it's comfortable as compared to, say, others in the peer like RBN and all. So these two sectors look pretty strong to me. And I think yesterday it was an overreaction to the market. Today, if market gives you a chance to, open on low side, you should be going all long on the market, because looking at the numbers, ex-Nifty, around 325 companies we have done in aggregates on year-on-year basis. The PAT number has grown by 16%, and quarter-on-quarter they have grown by 6%. This is after adjusting for the labor costs. So the outside larger market is very strong. Large caps may take its own time, but the market itself looks very healthy and very juicier at current valuation multiples to do cherry picking.
So HAL and Ircon. HAL trades at 30 times forward multiple. What about Ircon's forward valuation? What is it?
So Ircon forward valuation will be around 21, 22 times. Okay. But I think the execution is likely to pick up. So this can get, to 19 times or 18.5 times.
Got that. The big positive is also the 21-year tax holiday to foreign companies to set up data centers in India. What is the investable play here in India? And if you could, give us 1-2 stocks and the rationale behind it, if at all.
Rima, good morning. It's a very large space, and it will take its own sweet course of time to get us into the entire, revenue and PAT kind of earnings visibility. We have to see how much of it comes to the Indian companies, and there I think a couple of companies are there. We have initiated coverage on Orion Pro Solutions Limited. They are there in the data center structural architecture stack. And what they do is an asset-light model. They design the entire data center model, do the software integration into the hardware, and that is where they make enough profit. So right now it's around 18 to 17% of their entire revenue pie, which is likely to go up in near future. They have already done 2 projects with RBI and one more company, and the name just I'm missing out right now. So they also have a historical track. Other than that, NetWave is already there. E2 is there. So NetWeb and Orion Pro Solutions, I think they should stand to gain significantly from this entire, offering coming in future. But it won't happen overnight. It won't happen in a couple of quarters because a lot of structural issues are there. First, allocation of land and putting in the entire real estate infrastructure in place. So maybe 1 year down the line, we can see the benefits of it trickling down to the profitability.
Dharmesh, this morning when I think at 9 o'clock bond markets, etc. open, I think, the sense is perhaps you will see an uptick in yields because of that gross borrowing number. Financials, NBFCs, any thoughts on that pack? If the market, that's not your view. Your view is actually based on earnings that you've looked at. It's looking healthier. But, there's another segment which believes actually everybody's going to go sit in banks because, it's perhaps valuation comfort, safety and things like that. But these rising yields, does that sour that view in any way?
In very short term, yes, because there would be mark-to-market losses in the treasury side, and that can take up part of the profitability, which happened in Q1. I mean, the same phenomena played out there. Q3, somewhat rebalancing was done, but again, the same problem crops up there, and it's 30-35% of their profitability. The treasury income, it has a significant chunk in most of the banks' profitability. So, but definitely from a trading point of view, I think there should be some decline out there. Yesterday, we saw sharp selling in most of the PSU banks. 7-8% kind of a correction was already there. Maybe 3-5% more, but again, my long-term call is you should be buying those corrections.
Okay, and what about the capital marketplace? BSE got slammed yesterday. I saw on Friday as well, the stock lost its way second half of the trading session, and it's followed that up yesterday with another slam dunk. What would you do? Any of these capital marketplace you want to dip in, or you rather stay away?
Yeah, Nigel, I mean, as far as wealth management, asset management companies are concerned, they are a good pick out there. But BSE, MCX, I mean, all the infra plays definitely. There are two reasons. One is the STT hike, which happened yesterday, which will definitely cut down on volumes of most of the derivative algo trades. So all synthetic trades, high frequency algo trades will see a trim down, but it will happen 2 months later. I mean, from April, it will be effective. So we have a window of 2 months out there. The second most important reason is the NSE is coming out with an IPO, and there was a differential in the valuation multiple going by the unlisted price of NSE shares between BSE and NSE. So that I think will get adjusted right now. So for some time, I mean, maybe 6 months or down the line, till this entire NSE IPO is through, sustainable traction on BSE shares is unlikely. It may take time-wise correction, but I don't think it's going to have a healthy upside traction.
Okay, Dharmesh, appreciate you joining in and giving us some stocks this morning. Defense, railways, some of the data center plays as well is what you're pretty positive on, while you're saying capital market plays maybe go through a phase of consolidation, so you'd rather stay away. Have a good day ahead, and we catch up soon. Thanks a lot for joining in.